Ben ritrovati giovedì mattina su Florida New York Stock Exchange, tanto fermento tra i trader, appunto abbiamo saputo dell'offerta da parte dell'Intercontinental Stock Exchange, ne parliamo con la nostra ospite qui su Floor che è Doreen Mogavero, che è fondatrice, presidente e amministratore delegato del floor broker Mogavero Lee Co. Doreen, thank you so much for being with us.
Thank you so much.
So Doreen, Intercontinental Exchange, ICE, comes here, taking over. Is the end of the stocks, or this could be a new future for this business?
Well, as we spoke a little bit earlier, I have more than one hat that I wear here. I own stock. I was a seat holder previous to going public. I am a business owner, and I am a trader here for over 30 years, 32 and a half, 33 years. And so I have an emotional component and a practical component. As I said to you, if looking at the stock at $23 one day and now looking at it at 31, obviously I'm a happier stockholder today than I was a week ago. As a business owner, I think that my hope is that our new CEO and new management team will continue in the vision that Duncan has begun to lay the foundation for. If that happens, I think that we are going to have a very bright future here.
Yeah, the part of the value, you're totally right. I mean, the offer is over 33, so we are getting close to that, the offer today. But if you consider only last April, the offer that the stock exchange got from ICE and NASDAQ, it was for over $40. So what does tell you that maybe stocks is not just an attractive business, it's losing value, everything is going to be derivatives?
Well, it's telling me that Mr. Sprecher is a very bright man, and he's probably buying this place at a very depressed price. So that's good for him. Obviously, stockholders are getting more than current value. That's good for us. So we've met somewhere in the middle, it seems, and that would make for a good deal, I suppose. I think that I'm not sure what it says about equities. The price of the deal may say that it may be reflective of the fact that volumes across the globe are way down in equities, and people are using the stock market much differently than they used to. They're not buying and holding individual stocks for a year or two. Everything is really, as we've talked about hundreds of times, short-term strategies, and those are much more friendly for derivatives and of any kind, options or ETFs, and that seems to be the way that managers are even starting to manage their money more with ETFs and derivative products. So if you really look at the market structure over the years, listed equities used to drive the price of derivatives. For quite a while now, derivative prices have been driving the price of equities. So I think from that point of view, we've all seen this kind of transition coming. It seems to be here. That doesn't mean that the value of the equities are any less. We still need them to base our prices on. So I think from that point of view, I think we just have to find a way to transition into a different sort of strategy. But I think and I think this Mr. Sprecher may be the guy to help us do that, so it might be a really good thing.
And the building is staying. We know that the floor, for now, at least, as far as we know, the details that we know, the floor is staying, and this confirms the strong of the branding, of NYSE branding.
I think the brand will keep the floor here because it is one of the most recognizable brands in the world. Dick Grasso used to say you could go anywhere in the world with an NYSE hat and everybody knew exactly, where you were from. And but I think in the last 2 years, through multiple technological glitches, if you will, we've seen the value that human beings bring to the marketplace, and I think that that's been emphasized over and over again over the last few years, further kind of cementing the fact that we do need people. We obviously don't need as many as we needed, but we certainly do need some. So, I think that there's still a future here. You can't look at every time that there's a change as something terrible. You have to understand that there's a lot of change. In change, there's a lot of opportunity, and you have to look for that. And I think that's what we're going to try to do here. And I think that, if Mr. Sprecher is as smart as I suspect that he is to have built ICE in the short period of time that he has, we may have a very bright future here.
How about the competition, the competitors? What is going to happen, you think?
Well, I guess that depends on the direction that they take us, I think that we will be very well positioned. Well, Duncan has set us up to be very well positioned globally, from a competitive global standpoint. And I think if we maintain that course, I think we're going to be okay. I mean, listen, I don't think we needed to be taken over to be okay. I think we would have been okay anyway. I think a lot of the volumes decrease here has nothing to do with management or anything else. It's purely.
It's not just here; it's worldwide.
I mean, it's economic. I don't think that has anything. That is not a statement of present management success or not. I think that we would have been fine. Why this is happening now is because it's obviously a good value for the CME. And if it's a good value for the CME, obviously it's probably a good value for me. And I'm not so sure that I would sell my stock, just because the deal will be cash and stock.
Yes.
Certainly the cash portion we'll take, and the stock, I suppose, we'll be able to do with what we want, sell it or not. I don't know if there's be a lockup or what. There's no terms on that yet, but I don't know. I think it's an interesting time, and you have to view it as an interesting time.
And do you think that is going to be okay? I mean, we know that the Department of Justice last April said no to the ICE and NASDAQ offer to the New York Stock Exchange. You think that this time is going to be easier?
Oh, much. I mean, I think the NASDAQ component was the problem. There's the anti-competitive piece that, if we were to merge with them, it's one big giant conglomerate thing. But now we're talking about government. So you never know what they're going to do, obviously. We've seen that. But I think it will be easier. And I think probably in some part, it's probably been vetted in some way by the CME group to see, what the feasibility of it is. I'm sure, the New York Stock Exchange, they must already have a pretty good idea of what the chances of it passing will be. So I'd have to say from the looks of today, it's probably going to be much more easy to do than the others.
Now let's stay on the government, one of your favorite topics, Doreen. And definitely the government, we have seen that, is keeping hostage the market. The end of the year will depend, we can easily say that, on the future, on what is going to happen, if we're going to fall from the fiscal cliff or not. What the market is going to be at the end of the day, at the end of the year, what is the market is going to be on December 31st?
Well, I think it's an unfortunate statement, but I think it's got to be made. It's going to depend on what they do in Washington. And right now, it certainly doesn't look as though there is much movement towards a resolution at all. This morning, I think Steve Forbes was on television, or last night, I don't remember which. They meld into each other these days, saying, that Mr. Obama is just not willing to accept the white flag from the Republicans. They've come so far, and he's wanting more and more, and it seems to be that it's getting more and more contentious rather than easier. So I have to say that if we go over the cliff, we're going to go over, so get ready.
Well, do you think that if apparently the vote is going to be tonight at the House for the Plan B, Boehner's Plan B, do you think that, some people are saying that if it passes, apparently if it does, it's going to be a thin majority, the House, and it goes to the Senate, and maybe Harry Reid managed to change it to make it more appealing to Barack Obama, will the president sign it, and there is still chance that we have a resolution soon?
If I knew that, I would be outside selling tickets. But, I don't think you can tell what anybody's going to do at this point. I think the president seems to be pretty dug in. I mean, I think we have to look at the numbers that are projected to happen if we go over the cliff. I mean, the CBO, Congressional Budget Office, has put out some projections as of the end of November that you could be looking at over 9% unemployment if we go over this. If we go over this cliff, obviously a recession. I think we're still in one anyway, but that's another. We don't have enough time today for that. But I think 9% unemployment is not going to be a pretty picture when I already believe that the numbers that we have are low relative to reality. I think that they're much higher because we just don't have the ability to track the people that aren't working once they fall off the rolls. So I think that if you were looking at a reported 9%, it would be much, much higher, and we'd be in a full-blown depression, never mind a recession. So I think...
so it's paramount not to fall.
Well, I think it would be wise to do everything we could possibly do to try to not do this. I mean, then the other question is, with monetary policy being what it is, and you've got a debt ceiling coming up, potentially February is the estimated time. What is the exit plan for the Fed? Where is it? Do they have one? Are we going to forever just be printing money and trying to keep ourselves from going into a bigger problem? I'm not sure that's right either. So there are people that believe going off the cliff and doing it is just getting it over with and starting again is the best way to go. So, I think it's really a toss-up at this point.
So basically, Doreen, it's impossible now to really make prediction on 2013 until we don't know for certain. But let's assume we don't fall off the cliff and we manage to find an agreement. What are your thoughts for 2013?
Well, I think that corporations will still be extremely cautious. I don't think that they're going to run out and hire people. I think they have enormous balance sheets, which I think that they are going to keep pretty close in cash or wherever they have it. So I don't think that there's going to be a huge amount of spending. I don't think there'll be a lot of change. The first half, I think people are going to wait and see what the first half of next year looks like and what growth looks like. Because, there's a lot of talk around the numbers, and are they real? Are the housing numbers real? Is there really a recovery? My opinion is no. My opinion is that the housing numbers are better because there are speculators buying up unfinished developments and renting them out to people that can't afford. People are not running out and buying houses, normal, ordinary people. So I'm not sure that there isn't a way of viewing all these numbers in a different way that's probably not really as optimistic as they're being presented. So I think we want to see what happens the first half of next year, if I'm right or if I'm wrong,
Thank you, Doreen, and Merry Christmas.
Merry Christmas. I think it'll be a good one anyway. You don't have to worry about that.
Always. E grazie a voi per l'attenzione. A domani.